All right, let's talk taxes. I know. It can feel like this super complicated, tangled web, right? Well, today, we're going to untangle it. We're going to pull back the curtain and give you a really clear picture of where your money actually goes and why. So let's just dive right in.
I mean, you've totally asked this before, right? You look at your paycheck and there are all these deductions. You go to a store and there's an extra charge on the receipt. You get a bill for the house you live in. What is all of this for? Well, that's exactly what we're going to break down. We'll look at the taxes on what you earn, what you spend, what you own, and even peek behind the curtain at how businesses are taxed.
Okay, so let's start with the big one, your paycheck. For most of us, this is the biggest piece of the tax puzzle, and honestly, it's where a lot of the confusion starts. We're going to begin with the money that's taken out before it even hits your bank account. So, right off the bat, let's clear up something that trips a lot of people up. Those two main taxes that come out in your pay, they are not the same thing. You've got your income tax, which goes into this big government pot to pay for stuff like roads, the military, you name it. But then there's that other one, the payroll tax. You probably see it as FICA. And that money, it has a very, very specific job.
Yeah, FICA, it actually stands for the Federal Insurance Contributions Act. Think of it as a dedicated fund. Both you and your employer pay into it, and its whole purpose is to fund Social Security and Medicare. You know, those massive safety net programs for retirement, disability, and healthcare for seniors.
And just how big a deal are these taxes? Well, look at this chart. It's huge. For literally decades, these two things we just talked about, the individual income tax and those payroll taxes, have been by far the two biggest moneymakers for the entire federal government. It's staggering, really.
Okay, so we know what income tax is for, but how is the amount you pay actually calculated? This is where we get into the progressive system and tax brackets, a concept that, let's be honest, is super misunderstood. So let's crack this code.
All right, here's the most important thing to get. The U.S. has what's called a progressive tax system. All that means is that as you earn more money, the percentage you pay in tax goes up. But, and this is the part everyone gets wrong, you do not pay your highest tax rate on all of your income. That is not how it works.
Okay, check out this table. These are the federal tax brackets for a single person back in 2017. See all those different percentages? 10%, 15, 25? The best way to think about them is like buckets. You pour your income into the first smallest bucket. Once that's full, you pay 10% on just that amount. Then you start pouring the rest of your income into the next bucket, and you pay 15% on that amount, and on it goes.
Let's make this super concrete with an example. Say you earn $40,000 a year. You are not paying 25% on all $40,000. No way. Here's what actually happens. Your first $9,325, that gets taxed at 10%. Then the next chunk of your money, all the way up to about 38 grand, gets taxed at 15%. And it's only that little bit of income you have left over that gets taxed at the 25% rate. See? Each dollar gets taxed in its own little bucket, and only once.
All right, so that's the tax on what you earn. Now let's switch gears and talk about the taxes you pay on what you spend. You know the one. It's that little extra line item that shows up on your receipt pretty much every time you buy something.
Yep, we're talking about sales tax. The store collects it from you at the checkout, but what's interesting is that it's often not just one tax. That percentage you see, it can actually be a mix of a state tax, a county tax, and maybe even a city tax, all bundled together. But get this, not every American pays sales tax. There are actually 5 states, Alaska, Delaware, Montana, New Hampshire, and Oregon, that have no statewide sales tax whatsoever. Pretty wild, right? It's a perfect example of how different things can be just by crossing a state line. Okay, so we've covered earning and spending. Let's move on to the third big category, owning. And if you're a homeowner, you are definitely familiar with this one, property tax. Now, unlike the income tax we talked about, which is a federal thing, property taxes are super, super local. These are taxes from your county, your city, maybe even your specific school district, and they're based on how much your property is worth. And the cool part is, that money usually stays right there in your community to pay for things like your local schools, the fire department, and fixing the roads on your street. And the difference from place to place, it is absolutely staggering. I mean, look at this. A homeowner in a state like New Jersey might be paying a property tax rate that is literally 10 times higher than someone in Louisiana. It is just a massive reminder of how much your zip code can affect your total tax bill. All right, last but not least, let's take a quick look behind the curtain at how businesses get taxed. And this is important for all of us because, it has a ripple effect on everything from the price of a gallon of milk to the jobs available in your town.
So there are basically two main ways this works. A lot of smaller businesses like LLCs are what you call pass-through businesses. It's pretty much what it sounds like. The business itself doesn't pay income tax. Instead, the profits just pass through to the owners and they pay the taxes on their personal tax returns. But a big traditional corporation, that's different. The corporation itself gets taxed on its profit. And for those small business owners, there's a key number to know. 15.3%. That's the self-employment tax. Remember FICA from earlier? Well, this is basically their version of it. Since they're their own boss, they have to pay both the employee and the employer part of the Social Security and Medicare taxes.
Now contrast that with a big corporation. It could face a federal tax rate of 35% on its profits. But then, get this, when the company pays out some of those already taxed profits to its shareholders, those shareholders might have to pay taxes on that money again. That's the famous double taxation you hear people talk about.
So what's the big takeaway from all this? It's that the US tax system isn't just one single thing. It's this complex, layered web of taxes on what you earn, what you spend, and what you own. It's federal, it's state, it's local, and it touches pretty much every part of your financial life. And just understanding this structure, that's the first huge step. It gives you context for that paycheck, for your monthly budget, for all those big financial decisions you have to make. So now that you kind of see how all the pieces fit together, I'll leave you with a question. How does it change the way you think about your money?